So the first pair we have with us is the British pound versus the Canadian dollar. We can see that the price had been consolidating itself for a range for a while, after which it gave a breakout and consolidated itself again. But it could not hold itself in the higher price and it fell down to the lower range of the earlier consolidation phase. Now we have around two buyer traps here. We can see that buyers were trapped in this place, as well as this can be a buyer trap as well. If we switch to the weekly time frame, we can see that the price had been forming a lower low and lower high formation that suggests that the market structure is pretty weak. Now, if we check the last weekly candle, we can see that there is a formation of gravestone doji. Also, if we check when the last swing was broken, there was a sharp up move. They trapped some buyers here, and then again a big marabuzu candle, which shows us that the bears were again in control. Now, the last weekly candle can again be a trap for some buyers. Thus, we can initiate a short position as soon as this low is broken. The final target is pretty far at around 400 pips. So what we can do is when the swing low is broken, we can just put our stop loss above the breakdown candle and target for 1:1.5 or 1:2 ratio, and then trail our target till the final target is achieved or it hits our stop loss. So up next in our list is the Euro versus Canadian dollar. We can see that the pair has been in a downtrend for some time now, and it has been consolidating itself at a tight range for some time. It has taken supports multiple times from one price range, that is around 1.33850. So each time it has taken support, the support has been getting weak. We can conclude that from the by comparing the supports. The first time it took support, there was an instantaneous really bullish candle. Second time it took support, the bullish candle was not as strong as the earlier one, but the last time it took support, we can see that it rose to a price limit, but then it was instantly pulled back by the sellers. Now it is very possible that this support will be broken down next time. So what we can do is we can short as soon as this swing is crossed, and we can take a target of around 1.5 to 1:1.5 to 1:2 risk to reward ratio, and the final target will be around 300 pips. But that cannot be achieved directly, so we need to trail our stop losses, and then either the target will be achieved or we hit our trailing stop loss. Up next we have is the US dollar versus the Japanese yen. We can see that the price has been consolidating itself in a range in the hourly time frame. What we can do is as soon as the market opens and the price crosses below the bottom of this candle, we can go short, putting our stop loss above the range high and taking a target of at least 1:1.5, or the final target should be around 1:3 risk to reward ratio. Also, as soon as the price hits the bottom range and we can spot any kind of support, we can go long above from that point. Suppose the point is here, we can go long above from this point, putting our stop loss below the lower range and taking a target of till the upper range, or at least 1:1.5, 2 or 3 risk to reward ratio, till we spot a breakout, where we will not be interested in a breakdown since this whole pair was in a bullish trend. So if we see a breakout and then some kind of price action is made at this point, like we can see a lower we can see a retest and then it breaks the high of the retest, we can again go long from that point with at least 1:1.5 or 1:2 risk to reward ratio. Up next what we have is the Australian dollar versus the New Zealand dollar. I posted few days ago about this setup on Reddit, that I was spotting a divergence in this pair and it gave this target pretty quickly. Now what I believe next is going to happen is the price might try to go between the earlier consolidation phase range. This is the range which we have here. So I will be interested only if the price sustains itself in this range for some time and then gives a breakdown. The reason being, this was the last support zone. So as soon as the price hits this zone, there will be some buyers that will be interested. But after that, if it gives a breakdown, we can easily say that the sellers are still supreme in the market, and this range will again be valid. Thus, as soon as after some consolidation this range is broken, we can go short, keeping our stop loss above the upper range, and we can take a target of 1:1.5 and then trail it till our target is achieved, or the trailing stop loss is hit. So lastly on our list is the US oil. We can see that the price has taken multiple supports from this trend line, and currently the price is trading near the high of the last swing. So what we can do from here is, if the price breaks this last swing and gives a candle closure followed by a retracement, and then if we spot any kind of bullish candlestick pattern, we can go long, putting our stop loss just below this range and try to achieve at least 1:1.5 or 1:2 risk to reward ratio. Alternatively, what we can do is, if the price faces a resistance here and falls back to this trend line, and then if we spot any kind of bullish candlestick pattern here, then we can go long from that point and put our stop loss just below any of these swing lows. It can be either this or this, and try to achieve at least 1:1.5 or 1:2 risk to reward ratio. So that will be all for today. Please like, share and subscribe for more such videos. Thank you.